Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, May 5th, 2015. Today folks, the question bar is open as always. If ever you have any questions, feel free to ask them. It will be my pleasure to answer them. In terms of news, the news that we had first of all concerning Shanghai is that the authorities are actually, there are some concerns because of the margin requirements asked by the regulatory authorities. Since January 1st, those margin requirements have been increased by 40%. I think it's a good thing that we have that because it's a way to actually calm speculators, because when we have a higher margin requirement, well, brokerage firms are being protected. Remember what happened to that company here, FXM? Remember that hit? Well, that's actually a problem because the company had leverage, didn't ask enough margin from their clients, so right now they ended up in deep So this is why I think it's healthy to actually have those margin requirements in China. Right now we have some concerns over that because the rate of hike has been really strong, 40% since January, so it's a lot, but still I think in the long term it's going to be beneficial for the Chinese market. Concerning Europe though, we have again some concerns over Greece. On Monday they're going to have to make a payment of $750 million to the IMF. If there's no agreement, well, they might default, and this is something that actually is will be negative. However, it's not the same opinion that the European Commission shares, because they say that their growth prospect for the Eurozone are higher because, first of all, the risk of deflation are lower, which is a good thing, because if there's inflation, it's positive. It shows that the economy is growing, and it allows companies to finance their dirt at a cheaper price if there's inflation, because the value of money over time loses some value. So it is actually positive. And they also say because of the stimulus program, those are also something that are positive and that will outweigh the risk of a Greek exit. Concerning the Canadian side, we had the trade balance deficit that shows that we imported more than we exported, $3 billion of loss. And we had another news here on a company that we received for an interview several times. It's Slice. Well, only one, sorry. It's Slice. And Slice, they made a contract with Toys R Us. And what they will do, they will provide their a visual mobile search system to Toys R Us. So whenever a person sees a toys that he likes, he'll be able to use the app and he'll be able to buy it directly from his iPhone. We also had some results from WestJet that did really well on its earnings. They beat estimates after the low fuel cost, but you see WestJet reached that downward trend and deflated. So it's actually why I usually recommend on Market Gurus TV to not be caught up on stocks when they rise on their earnings. There's also another news here on Golar Long. Golar Long, they got a contract for a project which is called FLNG with Ophir Energy. So this is a good news, and this is where Golar Long is being rewarded by investors. And Cisco Systems, they're working on some new products. And Mondelez, they actually got the regulatory approval from the European utilities to actually combine one of their coffee division in Europe. So this is good news from that. Tomorrow we're going to have several energy companies that will release their earnings. Today the sector made an attempt to start a bullish cycle on the US and also the Canadian side, but on Market Gurus TV that you can have access for free 14 days. What we advise is that you should not rush to buy those stocks in the sector, even if at opening it was starting a bullish cycle. We would rather see several stocks breaking out to confirm this trend of the bullish momentum on the sector before confirming a go on the sector. And if we take a look at the situation here in the US, well, look at what we have. We had a bullish cycle, we broke out that resistance, and now we had a sell-off which got us back within this side of information. So there have been some breakouts here, such as Another Core Petroleum, which broke out at opening, got back within this side of information. So that confirms that this attempt to start a bullish cycle was not credible, and we definitely cannot believe in a sector like that. And actually, I think the best strategy is if you have already taken some profits in your energy stocks. I give you an example, a stock like Precision Drilling that we recommended the Market Analyst Shorts and Market Gurus TV on April 29. Yesterday, we recommended to take some profit on that stock. If you did, good job. Hold on to your position on stocks in the energy sector, because even if the sector made a false attempt to start a bullish cycle, the sector still remains neutral. There's also a lot of selling pressure though among the financial stocks in the U.S. Here, if you take a look at the New York on Market Gurus TV, on New York, right, we have 39 breakdowns during the day, and 19 are in the financial sector. So out of those 19, most of them are actually real estate stocks. It's because interest rates are slightly rising in the short term, and this is why all those stocks, Killer Realty, Biomed Realty Trust, all breaking down. And the thing is that usually we don't like to recommend those stocks among our short opportunity and our analyst shorts portfolio. First of all, because of their dividend, and so we can have negative surprises, and usually they tend to be kind of a slow movers. So those are actually some of the reasons. But if ever this decline continues, well, we possibly might recommend some short in the financial sector, in the real estate sector, in the US. Also the same thing too on the Canadian side though. If you take a look at our real estate sector, it's also taking a big hit with having some stocks like First Capital, which is having a correction, but Chartwell Senior Housing REIT, a breakdown, Canadian Apartment REIT, it's a breakdown. So those breakdown here could bring CAR.UN towards 2750, which corresponds to that former support. So it's not an opportunity to short because you don't really have a big potential of 5 or 10% on a short like that. Now, let's take a question here from Zed. Hey, Al, yes. So that was the question from yesterday. I finally did the modification you asked me for. Just to specify NA on Zed, Zhu and Fashion. I bought 6,000 shares at 95 cents. Okay, so we bought at 95 cents. Okay, so, oh, be really below. And you bought $3 and something around here. But that's 23% the same day. Was I screwed? Thanks a lot. You're doing a great job, by the way. Well, yes, you got screwed. But the thing is, you know what, Al? I was looking at the stock here, and it's kind of, first of all, it's a Chinese company, so those Chinese companies, they tend to be explosive on the upside as well as the downside. So on that sense, you have to take into account that if you're buying a company and you're willing to hold on to it for as long, that you're okay to tolerate that risk, right? But if you hate to lose 20% or 10% on the stock, well, you have to be quick to take some profit on your positions. So the thing I found on Zhuan Fashion is that, look at this. We have a stochastics here that's towards the oversold situation. However, we do not see buyers coming in yet. Look at the volume unbalance, which is in yellow. Volume unbalance, it's still declining. So which means that even if we're actually starting to form a stabilization phase and we don't even have volumes that are increasing within the stabilization phase, which means that the wave of buyers is just not there. We don't even have a stochastic that's starting to tilt towards the overbought situation, which means also that there's not enough buyers there on a stock like that. So I think you bought it already at 94 cents, which was around this area. You bought again around 318. So I think to close that positions, I think it's appropriate. We have the 10-day, which is in red, that is starting to go below the 30-day moving average. And the 50-day, which is in orange, is still below the 100-day moving average. So for me, there's no reason to hold on to that stock because there's still a risk that the stock might lose more. If the stock you close that positions today, which I think is appropriate, and the stock, let's say, doesn't go down further, stabilize, well then your new entry point will be if the stock can reverse that downward trend and goes above 313. So for me, that will be the new goal. But right now on Zhuan Fashion, I see no reason why you should continue to hold on to a stock like that. I think you should close it. And next time, you just have to learn that you have to be quick to take some profit, especially when it's concerning a Chinese company. Those companies are volatile. You can make a lot of money, yes, but there's also bigger risk involved on those stocks. So make sure that you also be disciplined in your entry point as well as your profit-taking opportunity on a stock like that. Now, what's going on with PDL? I don't know what's going on with PDLZ. Really, that stock has been taking a big hit. For me, even if I take a look, I'm going to try to take a look to see if we have any news on Google Finance on that stock. But really, on North American Palladium, the stock is definitely not doing okay at all. When a stock has got a hit so much, for me, I don't even look at it, right? Because for me, when a stock is close to 7 cents, it's close to being delisted from the TSX. So for me, there's too much risk involved on a stock like that.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So I did some research on PDL on Google Finance, type the ticker, and the news I found out was most interesting, was relevant, was on April 16. And on April 16, what they announced is that they're trying to reduce debt in order before selling. So they engaged with Brookfield Capital Partners to cut their debt and increase liquidity. They also actually have, even if they're still producing, this is the amount that they've produced, but they were being hurt by the weak Canadian dollar, and they actually has lenders for certain relief concerning their financial situation. So it's not doing okay. They're producing, but they cannot manage their cash efficiently. And this leads me to the next questions of Wendy. So Wendy here, hi Chris, do you think we're close to an energy oil stock breakout? I'm going to try to share an article with you, Wendy, that we shared today on our Facebook page about the energy sector. And it's important because you take Z questions of PDL. He's asking what's going on with this. Well, first of all, technically speaking, the stock is taking a hit, but also the management is not doing its job. And the article I shared Wendy today on energy stocks, what the guy basically said is that if you want to invest into energy companies, well, you have to make sure that you invest with good management. Are we close to have a breakout on the sector, to have a wide world breakout? I don't think so, because we still have the conditions where there's too much supply, not enough demand. We need to have more demand. We need the economies to grow at a faster pace. We need Europe to get back on track. Yes, the comments are positive for the European Commission, but the euro is still facing deflation or inflation that's near zero. It's not enough. We need more. Also, China is slowing down, so less consumption of energy. The US already have their own oil and gas revolution. So are they going to consume more oil? Not that much. So you see, we are left with Europe that needs to grow, China that needs to grow overall to actually boost demand overall. And so far, we still have supply. OPEC has not cut production, and demand is not able to meet supply. Companies have been able to cut costs. So we had a short-term rally. Yes, that was positive. There was some money to be made. But to say overall that the conditions have changed, I don't think so. So for me, the energy sector, even if it made an attempt today to start a slight bullish cycle, we're still reluctant on marketgurus.tv to recommend to over-increase your exposure on the energy sector. As long as the sector remains neutral, for me, there's no need to actually open any new position on that sector, right? I think the perfect timing is only if we could have the sector that can actually confirm another clear breakout at 242 or so, maintain this increase with several stocks breaking out. And in terms of target, well, what target could we have? Well, actually, we have reached the 38.2%, so this is normal that at this point we having a stabilization phase with the Fibonacci retracement. So if ever we can go above 242, next target becomes now 261. But can we do that? I think first of all, we have to take into account the global situation, and it has not changed by much. I will advise you to take a look at our Facebook page or take a look at this article that's on my right. You'll be able to actually see the video or see the video there and see what the guys actually says to focus on companies that can manage well even under a low price environment. Now, one here wants to ask what to do with PLI. He wants to buy it. PLI. Well, PLI, it's actually going down. You want to buy it. So what could be the targets on PLI? Well, it's a tough question because the stock is actually on the verge of testing an upward trend there. On a yearly basis, the stochastics is not yet oversold, but I think that around this price here, 223, which corresponds to that former resistance of November, which was an important one, really corresponds to a point where we might actually have a pause on PLI. So PLI, wait for a pause around 223 or something, right? I think we could have a pause around this area here, and I will only get in if I see the stock reversing this downward trend. And for me, the entry point now becomes only at 247. But right now, with the 10-day, which is in red, that went below the 30-day moving average, with this important upward trend that is there, that shows me at 223, which also corresponds to that former resistance, I think there's still a risk that the stock continues its decline, which will only be an opportunity to get it at a cheaper price, and only higher than 243 that I found that PLI will be a go if it can stabilize around 223, 220, and 241. So if it goes above that point, that will be a buy. Now I want to show you here the list of the best breakouts and breakdowns. Exceptions, of course. Most stocks in the energy sector are on the upside. Well, forget Rock Energy, it's losing momentum. But a stock like Gear Energy, that's a stock that was able to maintain its increase. And if you want to buy some stocks in the energy sector today, don't forget that the sector turned out into a neutral cycle. But take into account that those stocks that you're buying, intraday-wise, can they maintain their gains? Can they sustain their gains? Gear Energy is a perfect example of a stock that does that. So for those reasons, I like it. Except that it's already surging by 6.84%, which makes the loss potential a little bit great because it's below that support at 225 that you're going to have to get out. So that's the risk on that stock. And Those are all stocks on the upside as well as the downside. Talking of a Chinese company that's taking a hit, today it's Alibaba that's confirming a clear breakdown today. So Alibaba, okay, for a short exit point if it does reverse this short-term downward trend around $83 for Alibaba. And I wanted to show you quickly a list on some airline stocks that are pursuing their decline. Air Canada is one of the leaders there, and elsewhere there's Delta Airline, and it's because of the oil rally. So airlines are taking slightly a hit, but they're not breakdowns of quality. Overall, folks, we have markets that are totally neutral. I don't think that it's a moment to be in a buying spree. A couple of stocks in the energy sector stood out, but most of all stocks got back within the neutral cycle. I think you should not rush to buy stocks in the energy sector. As I said, the situation has not changed overall, so make sure that you're already taking some profits in your positions. If you've done so, good job. Be patient. Wait for the next cycle to be confirmed with more breakouts that can sustain the rally. It's not what we had today on the energy sector. This is why it's risky to buy some stocks today on that sector. And elsewhere, folks, I think that it's a market where, as long as you're staying neutral, mostly it's going to be a better opportunity for day traders. And as for day trading, there's been one stock here in the energy sector that kind of stood out today. It's that stock here, KEG. If we take a look at this, it's actually, it has given one entry point here, another one there. So those have been the two entry points on a stock like that. Could you get in some bearish ETF today for day trading? I think you could. There could be interesting if markets make a new low, right? So they would be interesting. Actually, on the TSX, there's HXD that's right now interesting for a buy because the TSX is confirming a clear breakdown right now. But if you want to get into SQQQ on NASDAQ or SDAO or SPXU on the SPY, only if they can make a new low intraday, then they will be interesting for day trading. But right now, it's HXD on the TSX. That's an entry point as a bearish ETF. So that said, see you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.